Hey everyone, before you jump into buying your first home in Canada, stop. Let's break down mortgages, no boring bank talk, so you don't end up paying more than you need to. Let's go. First up, down payment. You need to have at least 5% down payment. Now, if you are buying a home more than $500,000, up to 1.44999, right under 1.5 million, you'll need 10%. Okay, so up to 500,000 is 5% and rest would be 10%. Now, if you are putting down less than 20% down payment in Canada, bank will have to get their money insured from a default insurance. We have 3 default insurance in Canada here. So make sure talk to your bank or your broker to help you understand exactly how much that cost is. You don't have to pay that cost upfront, but that will get added to your mortgage. Okay, next up, credit score. It's a very important thing to check all the time if you can. Credit Karma is one of the best app. I've used it for myself. If you are dealing with any Canadian banking, now most of them do have credit score check. Please keep that in check, because if your credit score is lower than 600, it's basically next to impossible to get a mortgage from a side. Okay, next up, fixed versus variable. Which one is the best option? Okay, if you know yourself and you know if payment can change and it's going to stress you out, my advice to you is stick to fixed. Why? Take one payment and it can go all the way for whatever term you choose. Usually people choose 3 years term or 5 years term. Now variable on the other side. Basically what happens is Bank of Canada can announce rate can go up and down. Whenever they do that, your payment can change with it. Okay. So now if you are the person who wants to take a little bit of risk and check what's going on with the market, you don't want to lock in one rate, variable is a good option to go with. Okay. Let's talk about what is the stress test. Sounds scary, people talk about it all the time. It's not that bad. All it means is the bank wants to make sure if the rates goes up by the time your renewal happen, can you afford with the new rate? So they use a higher interest rate to get you approval whenever you're getting a mortgage. Okay, programs to help you out. There's first one is called First Time Home Buyer Saving Account. If you open it this year, you can put $8,000 right away. Again, make sure you use that program. It's one of the best program I've seen, and I advise all my clients to make sure if they don't have it, open it. Wealthsimple is one of the really good place to just open it quick, transfer the money. Second one is you can use a RRSP. Now make sure you know your limit. What is your limit you can use? Once you use it for a down payment tax free, make sure to remember you have to pay it back. You can do it by increasing your income, or you can pay it back over 15 years. Okay, now let's talk about pre-approval. Everyone say, hey, get a pre-approval, but why is this so important? You need to know your limit. You need to know how much you can get approved for. And the best thing is, whoever you're working with, let them lock in one rate for you. So if they're locking the rate for you for 120 days, if the rate goes down, they should be able to get you cheaper rate. But guess what? If the rate goes up, you are protected. Okay. So final words before you house hunt: get pre-approved, know your down payment options, understand your credit score, understand your rate choices. And last thing is, other than down payment, you do need to have closing cost, which is the best way to look at is if you're buying a $500,000 house, you gotta have 1.5% in your bank account, or if you're getting it from your paychecks, your taxes, whatever's happening in your coming to your account, just make sure you have 1.5 sitting in your bank account other than your down payment. If you found this helpful, hit the like button and drop your questions below. And remember, buying a home should feel exciting, not stressful. Let's make it happen together.